From Forex Trading Unlocked. We want to welcome you to our Friday, January 28th Forex trading and cryptocurrency trading analysis. We're going to end this week out and see how things are going. We just want to show you real quick our disclaimer to remind you that this video is for illustrative and educational purposes only. Alright, and with that we also want to remind you, if you could real quick, hit that subscribe button on Twitch or on YouTube and join the Forex Trading Unlocked Army, and also make sure you pass it on to your friends as well. And why don't you also, when you get a chance after this video, go to Amazon.com and check out high probable Japanese candlestick patterns available in paperback and Kindle versions. Alright, with that, let's go to our live action screen. We have the Forex-Trading-Unlocked.com website pulled up. Under the products and courses, you can always hit the high probable Japanese candlestick patterns button and learn more about the book too if you want. Alright, so we have the Euro US dollar already queued up. So as you can see from our analysis earlier in the week, we took out this nice supporting trend line that was holding the sideways to higher correction, which definitely was a correction. Confirmed now, since we have made a lower move high and a lower move low over the past two sessions. Following through a little bit today, not too much. It's not too heavy. So the market maybe, I wouldn't say overdone, but it's winding down for the week and absorbing what's going on. So also, if you wouldn't mind, also when you're watching this video, share it with your friends. Okay, alright, what else is going on here? So for the Euro US dollar, we had this big bearish slide that's happened over the past 2.5 weeks. So what is going on? Why is this trend happening? And what is the likelihood it will be continued? Alright, well right now we know about the Ukrainian-Russian conflict is gaining momentum. The question is not whether or not they will or will not invade Ukrainian, the Russians. The question is, will they be restricting natural gas and other resources to the EU and Germany especially. So should these things happen, well, that could be a very big issue. So these are the things that are weighing on the EU. You have to be mindful of this stuff, and it's not about politics, it's about what politics will do to the markets. And what's going on now is definitely an event trade shaping up. Okay, so as far as how much further can we go, well, I would say that if we maintain this trend, there's a sell rally forecast right now until we have some resolve with what's going on between Russia and the Ukraine, which is going to take at least a couple of months. If there is some action, it would be very doubtful that they're just going to go marching in there in the next couple of days. There's also, the Russians are waiting to see how the U.S. truly reacts. The 8,500 troops that they're sending, you got to realize that it's not about what side you're on. The U.S., NATO, and all the European countries have been violating the treaties with Russia since the Iron Curtain fell. So this is not Putin putting up a fight and trying to show what's going on. This is something more. It's more about them finally saying, we are drawing a line in the sand, no more. So it's not about what side you think is right, but that these are facts, and that will weigh on the Euro US dollar. So I would say that most likely you could see the Euro trading down around 109.5 down to 108.75 area sometime within the next week and a half to 2 weeks, but it's going to be a gradual trend. I don't think you're going to see a big sell-off like this, or even like what we've had over the past couple of weeks. Now remember, we had a high here around 114.85. Now we're a little more than $3 lower than that, about $3.50. So this wave, do I think it's going to extend further? Yes, I do. Which another $3 would put us right into that 108.5, and I think that would be a good symmetry as far as how much the market's going to take off the table in the short run. At that point, I would think you would start to see at least a bullish correction, something like this, where it's more sideways and just trying to poke through resistance before it finally gives out again. Another thing that's weighing on this trade is the looming higher interest rates in the U.S., which, by the way, we can check out on the CME real quick. Let's see what the 30-year and the 10-year are doing. Go to the market data here. Now remember, this is in delay. So we have the Treasury market pretty much unchanged. The 30-year bond is down 5 ticks, and the 10-year is up 4 ticks. So it's pretty much indecisive when it comes to that. But let's see what's going on with the energy markets. Oil, I believe, was rebounding still this morning. Yeah, it's trading up at 88.25. It's up $1.64. So this is going to weigh on the euro. Raising oil prices doesn't help them since they don't produce any. Also, the interest rate variable becomes bullish the dollar, bearish the euro in the short run. However, they will be raising rates with the ECB. However, I do not think that they will be doing it as quickly or quite in tandem with the U.S. I think they're going to still be printing a lot more money before they're going to give up that fight. So that's just my personal view. We'll see what happens. If there's any change in that ECB speak, we will definitely go over it with you as these things manifest. All right, so let's see what is going on here. All right, we got a couple people on Twitch and YouTube. Don't forget to leave a question about a market if you'd like. We'll cover that as we are perusing the markets. All right, so for the euro US dollar, we're very bearish. What I would say, though, is be very mindful of a correction back to around this 112.70 area here where this last prior swing low was. If we get up to about here, I think that's about the extent of any rally before it falls back on support. Be mindful of a quiet trade today. It's possible Sunday the market opens up a little bit in the evening, and then Monday makes a run for higher levels. I would say, once again, look for a rally to sell. So instead of looking for a break to buy, don't try and catch a falling knife here, folks. British pound US dollar is a little bit of a different story. It made a lower move low yesterday. It did not today. The question is, how far is this market going to go? Well, this was a good sell-off zone from this previous swing high. If it's just a correction, we are probably finding a bottoming area somewhere, if we haven't already, over the next few sessions. We have a target of a corrective move back up to this area here, around $135.92 to $136.30. Should we close like the market's looking here right now today, this would be a harami buy. Would that mean necessarily that we're bullish? No, I think that at the most we could get an upside correction kind of up towards our target area. I would key off of the low from yesterday's session around $133.91. Anything below there will have this market under pressure. How far? Well, it's indicative of what's going on in the world. The Russian-Ukrainian conflict does impact the UK, but not quite like it does the EU. Remember that the UK is a big supplier of oil, so oil is something that they have. And as far as natural gas and other things, those are things that they are not in the same situation as most of the EU, and especially Germany. So I would not expect their economy to be as price susceptible to what's going on with the natural commodities for the energy sector. The only thing with the pound is the fact that while we are probably leaning towards raising rates much quicker than the Bank of England, the Bank of England also will be probably following suit, but not necessarily as quickly as what we're doing. I think if anything, the United States, we're not the leader because less developed countries have been raising rates for already 6 months to a year. So that's not really necessarily that we're not starting this. It's just as far as the major countries in the industrialized world, yes, we are finally starting to lean in that direction. So we have a harami buy forming here. So let's say the market was to settle right now and be closed for the day and for the weekend. Does that mean that we're going to get a big rally? No, but I would say as a short-term aggressive buyer, you can key off of this low from yesterday, a few pips below that. Any failure from there, you do not want to be long. You just don't. You're on the wrong side of the market. Remember, the overall trend is bearish. The short-term trend is bearish. Even the intermediate intraday trade is very bearish. So, but we need a close like this today or higher, and then we will figure out from there what's going on. So we don't want to jump in front of a trade. However, should we get the harami buy today, and then let's say we have a follow-through up day on Monday, that would be then we would create a 3 inside up buy pattern, which would definitely give us a good probability that the market will make a run through resistance and try and make a challenge of at least this 135.92 area, if not spike up towards 136.30. Once again, I believe you'll run out of gas once you get to that area. If we draw a trend line, what's keeping this major swing intact, you can see that as time goes by, we're more likely to come into this downward sloping resistance line that's keeping the trend intact. Trading above there obviously would have us looking to take out this last swing high. Let's not get ahead of ourselves. You're looking at a longer term potential rally. What would be the catalyst for that? The biggest catalyst for that would be a market decline in interest rates, meaning higher bond and 10-year prices in the futures market and in the cash markets, which would put a short-term pressure on interest rates, lowering them. Because right now, like I said, the Fed is ahead of the Bank of England, and right now that's giving the dollar some strength versus the pound. The oil trade is totally not on our favor in the U.S. since we're no longer an exporter of oil anymore. We can now, for the last year, we've slowed down our pumping, and we've definitely slowed down our supply issues no matter what. Whereas with the UK and the British-owned companies around the world, they've been, moving along just as normal, except for the fact that they have now officially pulled out of the U.S. because there's no more new permits. So the only thing they have now is what's existing, and even that they're starting to transfer off and shutter because there's no reason to stay in the United States anymore. So those fundamentals right now keep it kind of neutral to somewhat bullish, but overall we still have the trend, which is more sideways to lower, meaning that the interest rate trade should take over. Now, if all of a sudden we saw how oil is up today and the interest rates are pretty much unchanged, if we get oil back above $90, especially $95, pushing $100 a barrel, you can pretty much guarantee that the pound US dollar bulls will come rushing back. In which case then we'll have to figure out that story once we get to it, but we don't want to try and predict what politics and other things like that are going to happen. We have to let the market come to us, and then we make our decision just like it's coming to us now. We don't want to catch a falling knife, but if you're already in a short trade, I would say work it and lower it, keep your stops tight, because there's a good chance of a correction, especially once again if we have a close similar to where we're at right now today, and then we have a follow through to the upside rally on Monday. I would say you have a really good chance at catching a bullish move short term, which is a counter trend trade up into this area here, and then I would expect most likely a failure there. So now let's go and look at the most volatile currency of the European thing. Big sideways. It's kind of funny when you look at this. We've had such a big up move in the US dollar Swiss relative to the euro and the British pound. Now, unlike the euro, which made a lower move low, the US dollar Swiss did not do that today, meaning inverted, meaning the dollar making a higher move high versus the Swiss. But I don't think that necessarily means that the bullishness is out. If you look at this chart, this thing has been chopping around basically between 91 cents and 93.5 for a long time, going all the way back to pretty much, if we go all the way back, look at this, 91 cents right here. Yeah, back to the middle of the summer. So we're looking at 8 months where this market has been trying to push higher, but hasn't been able to sustain any type of significant rally. Now, due to the factors of the interest rates and also oil and a couple other, and obviously the Russian-Ukrainian thing, I think that the flight to quality power of the Swiss is waning versus the dollar in the short run. That's why you're getting this bullish move right now. And I would expect to see a challenge of resistance to continue, but don't get overzealous. I don't think that we're making any big run towards parity or anything like that. I would say that you're going to see a lot of swings like that. Just as we've gone up like this, we're going to have a big sell-off like this, even if we continue to trade higher. Remember, markets typically go out like they come in. This is a radical, explosive move in the midst of a Fed week where nothing really happened yet except for more of the same gobbledygook speak. It doesn't mean anything. However, with what's going on with the other markets in the Eurozone, you can see that obviously dollar strength is prevailing, not quite as much obviously as the euro. The euro is the most susceptible, the pound the least susceptible, and the Swiss is somewhere in the middle. And it's, like I said, I think it's lost its luster as a flight to quality currency, at least in the short run. And due to that factor, I don't think you're going to see any significant bullishness out of this market, but I would look for breaks to buy I would be careful selling it right now just because of the fundamental and technical factors that are around. All right, US dollar JPY. Here we go. Want to talk about our nice little bull. We had a nice little bounce that happened this week. We could see right here we have a short-term upside target of 117.28 in the US dollar Japanese yen, and we have a long-term upside target of 122 even. Today the market's pulling back a little bit, not a surprise considering the fact that it's been trading. It had a nice little move here. You look at the low here was around $113.47. We're trading almost $2 full higher, and we did cap a $2 rally today with a higher move high. So that's a nice significant move in the US dollar yen over the course of this week. I think that right now you have a little profit taking going on. Remember that this is also where we had a lot of resistance in the market. I would use caution selling at all right now. If we get above 116.38, all bets are off, and our 117.28 price target has got a really good shot at being hit. Only a failure from 113.47 down here would mean newer move swing lows, in which case then we would be off the bullish path. We would be in a big neutral swing trade. I don't think that the market can get much lower than this prior low back here around 112.5 area. And I don't even think it's going to get near there anyhow. What would possibly create a sell-off and give the bears a chance to get down there? You would need to see a big sell-off in oil. You'd have to see oil go from where it's like now around $88 back down to like $78, $75. A move like that in the oil market absolutely would shake up the US dollar yen relationship and give a little bit of a breather for the bears and take the power away from the bulls in the short run. The interest rate trade, that definitely is strong arming the US dollar yen trade. There is no indication whatsoever that the BOJ, the Bank of Japan, is going to remotely be working like the rest of the central banks around the world. This is important to know, that because as long as they stay staunch with a do absolutely nothing stance as far as interest rates, that gives us nothing more than one of the best bullish indications for the dollar versus the yen. Now, does that mean the overall trend is going to be bullish? No, more than one factor needs to be there. However, when you have rallies, it's more significant because the strength is there, and as far as breaks, it's going to be much harder to sustain sell-offs in the US dollar yen because of that interest rate factor. Now, if, like I said, let's say for instance oil actually got down to $50 a barrel, we most likely would not be seeing the US dollar yen trading where it's at now. We would probably be back down around 111, 110, or maybe even lower. It's possible, at least in the short run. But I don't foresee any type of failure like that. So let's take the last swing low here and this recent swing low from a week ago right there. You can see the upward slope here is pretty gradual. It's a very sustainable upside trend. Unless we fall back and take out this upward sloping resistance line, I'm pretty sure that this last swing low is in fine condition. Now, think about it this way. This is important. If we did sell off from this higher move high, or this high right here, remember we had a higher move high here, we had a higher move low here, we right now have made a higher move high. So if this is the case that we start to fall back on support, only a failure from here would confirm the neutral to lower bias, because then we would make a lower move low after a lower move high, indicative of a lower trending market. Now, since we are maintaining higher move lows and higher move highs, we have to view any short-term sell-off as nothing more than a counter-trend reaction, okay? And then look for a buying opportunity. So I would be very cautious as a seller, especially where you're at right now. This is a good time to maybe, if you're bearish right now, sometime around this area to the high of today, with the 116.38 up here being your risk. This is a nice little area as far as selling, but here's the problem with that. Let's say that this is your risk from 115 to 125, so you got $1. What are you looking to make on this trade? Well, if right now we don't foresee any fundamental or technical reason for us to exacerbate a sell-off and make a lower move low. There's just nothing there to do it. Doesn't mean it's not going to happen. It's just very unlikely right now. So if that truly is the case and the solid trend is a bull, your expectations, let's say you made $1 on here and got down to 14.25, you're just coming down into this area. So you're going to have to be, it's going to be a short-term pick, and you're basically risking 1-to-1. There's not a lot of reward to risk ratio. What would be a better idea is waiting for the market to pull back down towards this potential area, find support, and have a low risk buy against this last swing low. Because if we take out the swing low, the bullishness is off. It's a small loser. However, if it does come back, retrace back down into this area and it holds, then you're looking at going from around 114 even, 114.25, all the way up through 116. Then you're risking basically only a half of $1 to make at least $2+. Okay, so that's a big reward to risk ratio. Those are the kinds of trades you want to take. You don't want to just take a trade just because you have a good signal. Is it worth the risk? Remember, you got to put your margin that goes up, you have your risk that goes up, and it also keeps you from other opportunities in the market when you take foolish opportunities. So be cautious about viewing any type of sell-off right now as any type of real true bearish reaction. I think if anything, it is just going to be a bearish correction. Now, speaking of bears, before we get to the cryptocurrencies, we're going to wrap up a few more Forex markets. The Australian dollar, US dollar, following through with this head and shoulder, taking out the low from a couple days ago. Over the past 2 days, boom, we have pounded a new weekly, monthly, new move low. Locking in, securing the bearish trend doesn't mean that we're not going to get a nice bounce yet, but we definitely have got in full access from this head and shoulders pattern. This has had a really, really nice sell-off. Not to mention we had a high probable Japanese candlestick pattern that initiated the head, followed through all through this move. Now we're looking for, if you're going to look for a buy signal for a counter trend trade, I would definitely wait until you get a really valid one, because momentum is to the downside. You got to remember, with all the restrictions and lockdowns and things going on in the world, there's a lot of factors that are weighing on the Australian dollar. If Australia would just lift their mandates, this currency would go screaming through the roof. I mean, screaming through the roof. And see, as the Australian dollar collapses, even though commodity prices are going up, they're losing money. They're not making any money. Plus, they're not shipping like they should be either, because all their supply chains are gummed up because of restrictions. So if they were to open things up again, then I would say most likely that not that the overall bear in the Australian dollar, US dollar is over, but you could see an exacerbated move to the upside. I mean, a huge move. I would say that all the other currencies reflectively around the globe may not even blink, but any Australian dollar cross at that point would find a lot of bullish strength. So, but until then, the bear is the momentum. The politics are behind the bear. The fundamentals are behind the bear. The technicals, don't try and pick a bottom. Don't try and pick a top. You know, wait for a valid signal. That's why even this thing, look at this. This was a counter trend correction to the upside. It ended with the head and shoulders, a classical bar charting sell signal. Does it always work? Well, it doesn't form a head and shoulders if it doesn't. So, but when it does, like this one here, we were looking at, is this all we're going to get out of this move? Now, from our high probable Japanese candlestick pattern, that put us right into this area. We found our already target there, but for the head and shoulders, that had us leaning towards where it's at now, pressing new move lows. Now we've completed that. Is there more left in it? I don't know. Markets go out like they come in. This may not be done. This has a lot of velocity to the downside and a lot of fundamentals that are driving it. So use cautious trying to be a bull. I would say definitely wait for a solid buy signal. Until then, look for a rally to sell into and then catch another wave lower. Now let's go to the New Zealand dollar, US dollar, and see what's going on here. This one here continues to pound new move lows. This one is bearish in a big way. I can't see this market doing anything but battering support. Now, I don't think it's going to sell off continuously in a velocity like it is here with this slope. But right now, New Zealand is most likely going to continue to pound support. They just put in a new mandate this past week that now contact tracing will quarantine anyone that's been connected to anyone that's tested positive. I don't know how many layers that goes back, but let's say, for instance, that you encountered somebody within the past couple days that they tested positive for COVID. Even if you test negative for COVID, you have to go into a 20-plus day quarantine. How is that going to work with businesses and everything else? I mean, you're talking about every time somebody gets a fever or whatever, or even if they do have it, it doesn't mean everyone else does around them or has caught it, and then now everyone else has to go put their life on hold. These measures cannot work. They do not work. It's the government getting in every aspect of life. Hey, it's not about what's right or wrong. It's just a matter of the impact, and the effects are definitely going to be negative. There cannot be anything but negative, and you can't keep doing the same thing expecting a different result. That's not going to happen. So the more they keep doing this, we have to expect the same results, which means gummed up supply chain, more scarcity of goods, not because there's a lack of things, there's just a lack of production of things because of the fact that everything's constantly closing or running on a skeleton crew. So look for rallies to sell in a big way, and until they change their tune on COVID, this market is not like the Australian anymore. Before, this was the lesser one that was tanking and it had more of a bounce. The Australian dollar has competition to the downside now because New Zealand is not as big as Australia, and if now with their constrictive measures, I can't even begin to imagine how devastating this is going to be to their economy. And they can raise rates all they want, which is something that's on the table. That is not going to support their currency, even if we haven't made an interest rate move, because there's just not enough strength there. It may slow the move, but it's not going to help them move. All right, US dollar Canada, this one here, talk about a nice little bounce. We've rallied through this downward sloping resistance line, keeping the short-term corrective trend down lower, and now we've breached it and we've come into our target area. So from this low, we had a target area right around here between this 127.06 and this last swing high here. Should we take out this level at 128.14? Well, that's when we start to think that the bulls are going to really be in control here. It's a mess, the whole fundamental technical thing between US dollar and Canada, especially with oil rallying. It's just going to be there's a neutral trade here. You can't look at the interest rate and oil market so much. It does have an impact. I think it's more the politics between the two countries. A lot of it has to do with supply chain issues too, with how they're gumming things up, just like New Zealand. And once again, politics, when they get involved in business life and people's personal life, nothing good happens from it, you know. So, and that we can see the reactions in the markets for it. So I would be cautious. If you are a seller right now, I would say you're looking to, if this is only a correction, you have a nice selling area right here, key off of this last swing high. If we get above 128.14, I would hope you have your stops in, because it's very likely we're going to challenge this swing high here. Now, as far as buying into this move, I would use a lot of caution here. I think you have to, we had a valid buy signal back down here off of the low. It's come into our target zone, so we're done with the buy signal. Right now we're viewing this as an upside correction. The overall long-term trend is bearish US dollar Canada. We had an upside correction here, capped by a shoulder, head and shoulder right there, this big head and shoulders pattern. Boom, we sold off, we found support. Now we're coming off a higher move low, looking to either make a lower move high and resume the downtrend, or continue higher, meaning that we're have a really big bull move coming on. So right now there's a lot of indecision. If you don't have any signals, don't try and force a trade. All right, Microsoft account problem. All right, get rid of that. All right, so that's where we're looking at with the US dollar Canada. All right, now let's go to the BTC USD. For those of you that are watching, if you haven't hit the subscribe button on Twitch or YouTube, go ahead and do that right now, and also share this video if you wouldn't mind with your trading buddies. All right, Bitcoin US dollar. Well, there's a lot of concern on both sides of the fence on Bitcoin US dollar. We're basing. We found a nice little low here. This is a long-legged doji right here. That's more of a short-term stop and trend, which it has. We're going sideways, as you can see. If this is a short-term bottom, which we're not trying to pick a bottom, an upside correction would need to penetrate this 44,654 level to become remotely bullish enough to push the correction up towards 51,000, up into the 55,184 area. I truly believe that this would cap any short-term rally. If we reach this area, it's very likely that you're going to have a lot of selling. Excuse me, especially by those that are buying in now. The sustainability of Bitcoin going, who knows? It could still go to $1 million like people want it to go. I think that when there are no more Bitcoin left to be mined, that's when you're going to see your big radical spike to the upside. How sustainable that is will be another story. I believe that truly it will be a upside V-shaped rally that will spike and most likely not return. So I think that will be the most obvious thing that will happen to Bitcoin. And after that, will it be still out there and used? Sure. Will the technology and blockchain be used? Sure. Until quantum computing comes and dissolves all of the cryptocurrency space. So that's the thing you really got to remember, is that the looming technology is not just doubling every 18 months anymore. It's doubling much faster than that. And quantum computing, which already exists, has just not gone mainstream. Once that hits mainstream, everything changes. I mean, you're not even going to be using the same cell phones anymore. Everything will be so much different than it is now. But that's a whole topic for another discussion and another day. In the short run, I think you have the potential to get up to this area, but then also it's very likely that we can still continue to grind lower. We're coming into the weekend. We'll see. You get a lot of trading over the weekend. Let's see how much indecision there is. But right now we don't have a signal, so use caution right now in the Bitcoin arena. As far as we put a hammer bottom here in Ethereum US dollar, we're looking for a challenge of this 1295 to 2948 area, somewhere in here. We have this downward sloping resistance that's capping the trend and tacked. If we get up into this area over the next few days, next week or so, we come right into this resistance. It's likely that we will start to go sideways, and then we'll have to see how their strength prevails, or if we remain bearish and all of a sudden we make a run for new lows. If this market does stall in this area on a rally and then starts to come back and make newer move lows, I would expect that you'll see Ethereum down towards $1,700, $1,500 very quickly. I think that you have more potential to the downside than you do the upside. So I think that, like I said, once you get into this area, resistance will prevail. Also, I think you have people who are picking it off. Anyone that's getting long here, I don't think their expectations are going to be that this is going up to 4,000, 5,000 anytime soon. Not that it couldn't do that. It very well could. But I don't think that that's the expectation levels, I think, are waning. Also, you have the fact that there's no more free money out there, so people need to start grabbing cash. So anyone that has cryptocurrencies that threw cash into it, whether they're up or down, it was free money, house money from the government. Now they want their money back. So I would be very mindful of that. All right, paper umbrella bottom that we had here with XMR US dollar. Very similar to the other cryptocurrencies, going sideways, not really hanging around doing anything significant. We have hit some critical support. I mean, my bottom value for a Monero for the technology basis and everything was around 180 to 220 as a good buy zone, looking to sell it out around $300 to $400. In that range, in between 220 and 300, it's pretty much the value of technology, of where it's not about a place to hold value as far as a store of value, but the value of the technology and the longevity of the technology, what it's used for. Above 400, it becomes less useful and more expensive. So as far as a true store of value, once again, I would use caution on that one. The sustainability of the technology is what gives Monero its value. And once again, once quantum computing comes in, they're just not, it's not going to exist anymore. So all the payment systems and everything that they're designing now to make things faster and cheaper and whatever, they are getting more expensive through the crypto space than they originally were. So it's not that that's not sustainable in itself, because technology is supposed to make everything cheaper, faster, and better, not more expensive, not faster, and not better. That equation doesn't add up. Things get replaced, quantum computing being one of them. So for the crypto space, very quiet today, unlike the Forex world. So we started on the euro. as you can see, we've had a nice little rally, a little bounce here going on in the Euro US dollar. I think it is nothing more than a corrective move right now. I would use caution as far as getting very bullish. If you are, key off of today's low. If we get below today's low, I would say, once again, if you didn't hear the beginning part of the video, there are so many fundamental and technical bearish aspects going on for the EU and for the Euro that it's going to be hard to find a good solid buying point. Short term, swing low for a correction to the upside to then look to sell again. That, I believe, is the proper view that one should have for these markets moving forward. So let's see if we got any questions. Nothing on YouTube. Got a couple more likes. We appreciate that, guys. Thanks for the likes on YouTube. On Twitch, we got a couple more viewers showing up today. You guys got any questions out there? So since we've talked about oil a lot, we're going to go and take a look at this. So we had this new high. This was a couple sessions ago from one of our other videos. Now we made another newer move high today. So what's the high today? The high is now 88.21 in the oil market, in the spot. All right. So as you can see, momentum is on the side of the bulls. Do we expect any sell-off? Well, there's always a little correction in profit taking, but the cash has to get below this 81.70 area to even view any type of significant correction. I don't even think you're going to be able to get there with the tensions that we have right now. In fact, if you look at how this was resistance up in this area, I think now that this low is going to be a good support base for oil moving forward over the next few weeks and few months. Not that we couldn't have a bigger correction, but even if we do, like if we get down to 75 bucks a barrel, that is a buy, baby, buy, because the long-term trend for oil is up and it ain't changing. XAU US dollar. Look at the gold. We always have questions from some of you guys on the gold. So our bearish engulfing line forming sell signal from the other day. We can correct this one. So it's not forming. It did form. We had this nice little signal in the gold market. And this is probably what's putting a little bit of a pause in the dollar momentum as well as with the interest rate momentum, because we have, I mean, look at this. We've had, let's see, the high was 1853 and now the low is 1780. So we've had a pretty nice significant sell-off in the spot gold market. Now this bearish engulfing line sell signal, if you want to know how far can it go, well, interestingly enough that we're talking about this. So here's the 0.618. Here's the 50%. So we've already fallen through our target range here on a Fibonacci basis. Not if you read the book High Probable Japanese Candlestick Patterns, you can find out the actual price targets for a signal such as that, where it gives you defined entry, defined risk, and also defined profit target objective, and also on how to manage that trade. So if you want to know how to get to that, all you got to do is you go to the forex-trading-unlocked.com website. Products, courses, and services, go down to the High Probable Japanese Candlestick Patterns page, click that, and on that we have a nice little video about the book. We have a little brief explanation, and here's a front page cover of the book where you can either buy it, you can share it, please share it if you don't buy it, and if you buy it, share it as well, or you can preview it, and this will give you a little introduction into the book and see how things go. Then you can go on to Amazon and purchase it in either Kindle or paperback versions. I highly suggest the paperback version. All right, so we have the gold market that took this little sell-off right here, is pretty much complete on the day. Are we going to see a balancing? I think we're done for this trading session today. I wouldn't expect much more out of it. Are we going to bounce? Anything can happen. So I think that you have this short-term sell-off going on, and then it's a break to buy, especially with the political stuff that's going on in the world today. So we'll see how this all manifests as the next week or so happens, and we'll see how these other cross rates start to become impacted on anything. So we went over our European thing. Now the biggest trade of the day for you guys, if you really want to look at a market that's leaning in favor, looking for a buyer, it's this US dollar yen trade. So right now we have a profit taking move going on right here, and I would look for a reason to buy this lower and then catch the wave higher, because remember, we have the short-term target of 117.28 and long-term target of 122. There is a lot of profit potential in this trend. All right, with that being said, I want to thank all of you guys for hanging out with us today. You guys have been great. Thank you for the likes. We really appreciate it. Once again, don't forget to go to Amazon.com to get your copy of High Probable Japanese Candlestick Patterns, and make sure you subscribe to Forex Trading Unlocked on YouTube and Twitch so you can catch our videos. With that, I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. You guys have a wonderful weekend, and please leave some comments in this comment section for our videos, because we will answer those when we get to them. All right, when we see them, we will get to them and we will answer them, and even ask questions about other markets if you want, and we will incorporate them into future videos.